Hello, my friends. Listen to me. Today, we need to have a serious, heartfelt conversation about a fear that keeps so many of you awake at night. You are either approaching retirement or you are already there, and you are terrified that the tax man is going to steal your hard-earned nest egg. I hear from people all the time who say, Susie, I am afraid to withdraw money from my traditional IRA or 401k because it's going to push me into a higher tax bracket, and the government is going to take all my money. Please, hear me on this, that fear is paralyzing you, and worse, it is causing you to make terrible financial decisions. You are leaving money on the table because you do not understand how tax brackets actually work in retirement. You are confusing your marginal tax rate with your effective tax rate, and today, that confusion ends. I want you to sit down, take a deep breath, and really look at the reality of your money, because true financial freedom comes from understanding the truth, not hiding from it. Let's address the big question right now. If your income puts you into the 22% tax bracket, does that mean the IRS takes 22% of every single dollar you withdraw? No! Absolutely not. If you believe that, you are wrong, and that misunderstanding is costing you dearly. The United States uses a progressive tax system. Think of your income like a series of buckets, or layers of a cake. Every single person, regardless of how wealthy they are, gets to fill the exact same buckets in the exact same order. First of all, before you pay a single penny in federal income tax, you have what is called the standard deduction. For those of you who are 65 or older, you get an even larger standard deduction thanks to senior tax breaks. This means a significant chunk of your retirement income, whether it comes from Social Security, a pension, or your 401k, is completely tax-free. That is your 0% bucket. Nothing touches it. Once your income goes over that standard deduction, you start filling the very first tax bucket, which is the 10% bracket. Only the money that lands inside that specific bucket is taxed at 10%. When that bucket is completely full, the next dollar you make overflows into the 12% bucket. Only the money in that bucket is taxed at 12%. If you have enough income to fill the 12% bucket, the excess spills over into the 22% bucket, and so on. Your marginal tax rate is simply the tax bracket that your very last dollar lands in. It is the topmost layer of frosting on your cake. If your highest dollar lands in the 22% bracket, your marginal rate is 22%. It tells you exactly how much tax you will pay on the next dollar you decide to withdraw. But your effective tax rate? That is a completely different story. Your effective tax rate is the blended average of all those buckets combined. It is the actual percentage of your total income that went to the IRS. Because your first dollars were untaxed, and your next dollars were taxed at 10%, and the next at 12%, your effective tax rate will always be significantly lower than your marginal tax rate. You might be in the 22% marginal tax bracket, but your effective tax rate might only be 11% or 12% overall. Do you see the difference? You are stressing yourself out over a 22% number when, in reality, your actual tax burden is a fraction of that. Why does this matter so much right now? Because when you are in retirement, you are no longer just accumulating wealth, you are distributing it. You are the boss of your own payroll now. If you are terrified of your marginal bracket, you might refuse to take out extra money that you genuinely need to live a comfortable, beautiful life. Or, even worse, you might avoid doing strategic financial moves like Roth conversions because you think you are getting hammered by taxes, when your average tax rate is completely reasonable. But I also need to give you a harsh dose of reality, because retirement taxes have a sneaky twist. While your ordinary tax brackets work like layers, retirement income introduces something called the effective marginal rate. This is where the true danger lies if you don't plan carefully. When you withdraw money from a traditional retirement account, it doesn't just sit in its own vacuum. That withdrawal increases your adjusted gross income. And when that income rises, it can trigger a domino effect across your entire financial life. An extra withdrawal might suddenly cause your previously tax-free Social Security benefits to become taxable. It could push your long-term capital gains out of the 0% bracket and into the 15% bracket. It can even trigger Medicare surcharges, known as IRMA, which drastically increase your healthcare premiums. So, while your official tax bracket might say 12%, the ripple effect of that extra withdrawal could mean your true effective marginal tax rate on that specific dollar is much higher. This is why you cannot afford to guess. You must be precise. So, what is your actionable takeaway today? How do you protect yourself? First, I want you to go find your most recent tax return. Look at Form 1040. Find the line for your total tax and divide it by your total income. That is your current effective tax rate. I want you to look at that number and let the fear go, because you will see that you are not paying nearly as much as you thought you were. Second, you must create a multi-year withdrawal strategy. Do not just blindly pull money out of your accounts whenever you need it. You need to look at your buckets every single year. If you are in a historically low tax bracket today, it might make perfect sense to intentionally withdraw money up to the very top of your current marginal bracket, either to spend it or to convert it into a Roth IRA where it can grow tax-free forever. Why? Because you want to fill those lower 10% and 12% buckets to the brim while you can, rather than waiting until you are forced to take large required minimum distributions later in life, which could blow you into a massive tax bracket. You have worked too hard for too many years to let a lack of knowledge ruin your retirement. Stop letting the fear of tax brackets stop you from enjoying your life or managing your money wisely. Understand your buckets, know your effective rate, plan your withdrawals with intention, and stand in your truth when it comes to your money.